Hey, how's it going, everyone? My name is Derek Ifasi. I'm the owner of Ifasi Financial Group, and today's topic, I want to show you guys how a hybrid annuity actually works and what essentially happens when you roll over a 401k account, an old IRA account, cash account into a hybrid annuity, or you roll over a portion of it into a hybrid annuity, and exactly why it may be beneficial for you. Essentially, and I'm going to talk in very generic terms and just understand that an insurance company offers hybrid annuities. An annuity can only be offered through an insurance company, so it all kind of depends upon which company it is and whatever the contractual guarantee is based upon that company that will give you a very favorable hybrid annuity. If you have certain dollars that are, let's just use the example of an old IRA account, and you understand, you know what, this is susceptible to downward market loss. I want to eliminate downward market loss. I want to participate in upward market movements. And then by the time I hit my certain retirement goal, my certain goal in years, and I want to take X amount of income from it, I could leverage one of these contracts to give me income in retirement that I can never outlive. So essentially, your premium dollars go in, and it goes into something known as an account value and an income account. Now, your account value is your actual physical money at all times. Account values with hybrid annuities, and especially the ones that I'm talking about, are through indexed annuities. So essentially, your account value is going to increase whenever that certain stock market index that you choose off of that contract. There's a couple different options. The one that you choose, whenever that index goes up, you're going to see a gain within your account. Anytime that index goes down, you're just going to see a set into that account. So you're receiving very safe, consistent growth on your account value. It'll go up whenever the market goes up, flatline whenever the market goes down or does nothing. Go up whenever the market goes up, flatline whenever the market goes down or does nothing. And essentially, you're receiving that safe, consistent growth, and your principal is staying protected. Unlike a traditional mutual fund related IRA, which will either go up whenever mutual fund performance does well and decrease whenever mutual funds go down. So one factor is a hybrid annuity. It takes care of that safe compound growth type factor. You're not utilizing a hybrid annuity essentially for return. You're utilizing it for safety, preservation, and income at a later date and time. That later date and time could be 30 days. It could be 20 years out. It all kind of depends upon your specific dollar amount and your specific situation that pertains directly to your goal. So as your account value is increasing or flatlining on an annual basis, and that's when the credits actually occur. It occurs on your 1-year anniversary, year by year, meaning that, if it's November 1st, 2013, and you place your money into a hybrid annuity, November 1st, 2014, you're going to see whether or not your account is going to receive some sort of credit, or it's going to receive a credit of 0%. It's very, very easy, very simplistic. This is the bread and butter. This is the reason why somebody wants to utilize a hybrid annuity. And a hybrid annuity, simply put, it just means combination. It's a combination annuity. This income account is designed through something known as an income rider. Majority of companies, they charge a fee for the income rider. Some companies do not have a fee associated with it at all. It all depends upon how attractive it is, how high is the contractual guarantee. So I want you to just always be mindful of this. Now, the income account will increase by a certain percentage rate every single year. So the income account is always meant to be higher than the account value at all times. This is what the company, this is the main objective of the company, is to always make sure that your income account is going to have a very safe, very high, consistent rate of return year by year. So that when it comes time for retirement, let's say you're age 60 and you want to retire at age 65 and you placed $100,000 in there, and all of a sudden your account value, it grew to, after 5 years, let's just say it grew to $150,000, and your income account grew to $300,000. Why is this important? What exactly do these two numbers mean? Well, your account value is your actual physical money. This is the money that you could touch. This is the money that you have access to. Some companies, you have certain limitations on how much access you have within these contracts within the first 10 years. Others are a little bit more flexible. This is the number that is essentially your computation. Your computation, meaning at that point in time, it's this number times something known as a withdrawal rate. Wow, this is very sloppy. Withdrawal rate equals income for life, income that you can never outlive. Now, all the bad press about annuities in prior years was if you annuitize a contract, if you take income from an annuity, you surrender all your money. After 2008, that's when the hybrid annuities were established. And that does not correlate to exactly what a hybrid annuity does. If you're looking to turn on income, and let's say at age 65, you could take 5.5% of this money, so it would be $6,500 would come to you every single year, regardless of whatever's happening on this account value side. Now, your account value could still participate when the market goes up, flatline whenever the market goes down, and you could still see that safe growth in this account. But anytime that you take this number, you turn on the income stream, this will be reduced by whatever that number is. It's very, very simple. Now, unfortunately, if you were to just have a regular account and you had this tied to mutual funds, or you had to tied to some other sort of financial product, whenever this account value hits zero, you have no more money left. You run out of money. All guarantees, they go by the wayside. Everything, you do not have a retirement anymore. You outlived your retirement. And this is what's happening time and time again with seniors and retirees and pre-retirees, as they're seeing their retirement accounts dwindle away. The reason why you like a hybrid annuity, or why a hybrid annuity is attractive, is this is contractually guaranteed on the company's standpoint that to never be able to outlive it. So if you're getting paid $16,500, and let's say the market was doing nothing or was going down, 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 and your account value was doing absolutely nothing, it would be decreased by 16.5, 16.5, 16.5, 16.5. If this thing hits zero, your account value hits zero, the company is still on the hook to pay you $16,500, regardless if you live to age 115, whatever it is, or you and your spouse, depending upon how you set up the contract. But just understand that there's very attractive offers out there with hybrid annuities. One of the worst things, the biggest mistakes that I see whenever individuals look towards hybrid annuities, is they choose blindly. They go through some advisor that they heard it talking at a seminar, or some random advertisement about some sort of product, and they just say, okay, yeah, that sounds good. Please understand, there's over 300 different hybrid annuity contracts out there. There's some that's better for somebody who's age 49, someone who's age 57, someone who's age 63. It all depends upon your specific situation and when you're looking to turn on income. Some of them are more attractive for account value growth. Others are more attractive towards only contractual guaranteed income. So you have to understand and really utilize a company that has your best interest at mind, that leverages all of the different contracts out there. And that's one of the things that we do here at Ifasi Financial Group. Please give the 1-800 number a call at any time, because we go through every single contract. First and foremost, we make sure that you're very educated upon a hybrid annuity, help you determine whether or not it might be a fit for you, and then show you what some of the top options are out there. If we have 3 different companies that we say, you know what, this might be a good fit, we also have proprietary strategies that leverage the companies that could get you upwards of 10 to 20% of the highest income possible, 10 to 20% higher income than 90% of financial advisors out there in the nation currently, because of our different proprietary strategies, and because we deal with such large volume of these contracts, we're able to really dissect these contracts the proper way. One of the things, as I reiterated, please give our 1-800 number a call. Become educated. Whenever you speak with a specialist, is completely free of charge. We want to educate you first and foremost. Hopefully that we provide enough service that you could utilize a hybrid annuity through myself or through my company, and just financial education is really the key to success, and the more frequent that you could become educated on any sort of financial products out there, retirement products, the better it is as a whole for just retirees and confident retirement planning. So once again, my name is Derek. Please give the 1-800 number a call. Please subscribe to our YouTube channel so you can get the most updated videos, and I really hope that you enjoyed this video. Thanks, guys.